Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all, and for a change, on time this time around. So, hopefully, you people would be happy that I'm on time this point of time and would try to do that on all occasions. So today again a very interesting topic that I have talked about is one of the Patreon members that have come out with the request. So those on Patreon can definitely request for a live session on a particular topic if they want to, not a stock but a topic. So I won't analyze companies here, but I will definitely discuss about specific topics, whichever that pertains to the market. So today I want to talk to you about the volatility in the market, the volatility that persists in the market and has been doing for the last 5 6 years. It hasn't been a fact that it was there say 10 years back or 15 years back. It has been a recent phenomena, and over the last 2 to 3 years it has become even rampant. So what is happening is that the market has been moving 1 or 2% every day, whether 2 3% up or 1 or 2% down, and even greater than that in the mid and small cap. You see 3 to 4% declines, and many stocks falling 8 10% in a day and then rising 8 10% in a day. So why is there is so much volatility? We'll discuss that. Plus I'll answer your queries, and I'll also talk about the market. So the first section of this session would be dedicated towards the market. So the next 2 3 minutes I'll discuss about the stock market, whatever that is happening, and then we'll move on to our you can say basic topic that I wanted to discuss on. So as far as the markets are concerned, 15,500, 15,600 is where we are at. It's doing okay after hitting 15,200 or so. The market is trying to stabilize here, but I have a feeling there could be one more round of selling that could await us, but we'll see. But if that doesn't happen over the next 1 week or 10 days, then we'll have a decent rally towards 17,000. So that's my assessment, although I was talking of 14,000. But it looks like if the market can sustain these levels for a week or two, then it's good. Another point that we need to look at is the crude. Currently, you can say the Brent crude is around $110 per barrel. Remember that during the Ukraine crisis, it nearly went to $140 per barrel, which is the high for this year. But now it has really come down by around 20 25% from the highs. Now if that goes below $100, that will be a huge positive, even if that means that it is going down because of the because of the you can say recession in Europe and US. Even if the news is negative and the crude is going down, even that is positive, because crude is one of the, in fact, the greatest import for India, and it is one of the greatest derivatives for most of the companies that are listed in the market, apart from banks or you can say IT. So in that sense, it's around $110 even now. If I look at it, $109.9 per barrel. So that is also a positive, and these are the reasons why the market has probably thought that okay, the worst could be behind us with respect to crude and with respect to inflation. Hence, we could move forward looking at it that things will get better from here on in. So if that is the case, if really crude goes below $100 per barrel, if we can curtail the inflation, which RBI is trying big time with higher interest rates, I think we are going to go towards 6% in a year's time. I think inflation would be taken care of by September or so. What we need to look at is the crude prices. If they can go to $100 per barrel by September or below that, that would be a huge positive. So it's a matter of time, as I explained earlier also in multiple live sessions, that it's a matter of time before the market again finds its mojo. I have a target of 21,000 over the next 2 years. I still believe that over the next 18 to 24 months, we will hit those levels. Yes, there will be hiccups. Yes, we will see over the next 6 months up and down movement. But I think 2023, if this year is going to be a washout for returns from a 6 months perspective, I think 2023 could be big because earnings are coming through. 805 rupees earnings right now. Even if we take 6% growth, we look at 855, and then 11% from there could take us to 940 rupees by, say, FY24. So in 2 years' time, we will be staring at 940 rupees EPS. And I don't see the market staying at around 15,000 with 940 rupees as EPS. People are talking of that earnings will reduce. So I am taking a reduced earning estimate. I'm not taking 20-25% growth on earnings or even 15%. I am taking 6% for next year and probably 10-11% for a year after. So that is very much possible with IT and many other, you can say, export oriented companies that could do well in a scenario where dollar could be around 80. Even if dollar is around 80, will do well. But I feel that if crude comes down, inflation comes down, I think some flows will come in and dollar may go to 76 rupees. So a dollar might cost 76 rupees rather than 80 or 81. So that is my assessment with respect to the market. It is very essential for the market to sustain 15,000. If it does for the next couple of weeks, I can see better levels coming in the next 4 to 5 months. All right, so now let's move to the topic of the day that I wanted to discuss, and this is with respect to the volatility in the market that has been sustaining and that has been growing over the last 3 years. It has sustained over the last 6 years, as I see it. I have been in this market since November of 2011, early November 2011, and from 2016, after the, you can say, 2016 November, when the demonetization took place, after that the volatility increased, and so from there on in, we have seen high volatile movements in stocks. And then from 2020 onwards, we have seen high volatile movements in indexes, whether it's Nifty, Bank Nifty, Sensex, Nifty IT, whatever you call it. Those all indices have seen extreme volatile moves, which percolated down to volatile moves in the market itself, when the market is up 2% or down 2%. So let's discuss about the main pointers. I believe there are five major points as to why this is happening. And the first and foremost in this list is algo trading. I believe that algo trading was extremely rampant in the US from 2002 to 2008-9 period. And in 2008, we saw that crash. So yes, major part of it was because of the Lehman Brothers and many other factors, but there was also a there was also a factor that a lot of people were doing algo trading. It was extremely rampant at that point of time. So if the market had to fall 3-4%, it was falling 7-8%, and this is exactly what is happening. If a stock is falling 3%, then people get panicked, and this is also one of the reasons why I'm saying that it's going to be volatile. So the whole scenario is like this. For example, any company, ABC company, is down 3% in a day for the first 2-3 hours, and then what will happen is that intraday traders or day traders will sell even more. It will go down 4-5%, and then retailers will panic and it will go down another 2-3%. This is because of lower volume. So these are perhaps more reasons that I'll discuss. But first thing is, it's algo trading. People put in the price. So suppose that ABC company is trading at 100 rupees. People put in the price at 95, 97 rupees, and then when 96 rupees is hit, it goes down to 93. Then other people come in and panic and sell. So a 100 rupees stock goes to 92, 91 very quickly. So this is one of the reasons. One of the reasons is especially algo trading. People buy big time when particular levels are breached on the upside. People sell big time when particular levels are breached on the downside. Second reason for such volatility has been low volume. So you need to agree with me that since September, October, what has happened is that volume has dried up. It reduced till December, January, and it reduced even further post the skirmishes in Europe, and post that in March, April, it got reduced even further. And now with higher interest rates, things are getting even worse. So volumes are extremely low in the market. So anybody selling any mid cap, say, even if they even if 10,000 shares are sold of a 10,000 crore market cap company, it goes down something like 2 3%, and then other people will also sell, and with lower volumes, and where there is very less buying, the buying volume is extremely less, so selling is taking place. So there could be heavy, you can say, sell off. Similarly, when buying takes place, then there are all buyers at that point of time, probably 10 buyers versus 3 sellers. So again, the volatility on the upside is extremely, you can say, uh, huge. The third reason for this is, remember that from 2011 or 14 or 15 till today, there have been more fund houses that are investing and trading in the Indian market. There have been more fund houses that have cropped up in India itself, which are domestic fund houses. So when fund houses trade in a market, and when they increase, uh, whether it's on the selling side or on the buying side, what happens is they are bulk trades. And when bulk trades take in, or bulk orders gets into effect, then again the panic would set in, and when they will sell or buy. For example, if ABC company, the same company, is being bought at lower level, say 80 or 75, and bought big time by fund houses, even if, since the volume is less, remember the volume is less and there is algo trading going on, and when fund houses buy, or any big player buys in the market, then other retail players will get in. And that is my fourth point that I'll get to. So retail players will get in, smaller players will get in, will jerk up the price even more, because the volumes again are less. So the fourth point here in is that more, you can say, retail participation has got in. And so there are a lot of positives with retail players coming in. I mean, retail coming in through mutual funds or other investments is absolutely fine, and that is where the bulk of the investments are coming in. But what is happening is that retailers are now trading in particular stocks, specific stocks, and especially mid cap or small cap stocks. So what happens is, if you take in the first 3 points, that there is already lower volumes, extremely low volumes. Then there is algo trading that even larger retail players are using, and fund houses are using for FIIs, DIIs are of course using them. And then there is a factor that there are greater number of fund houses and bulk deals happening. So when these things happen, the retailers, what they do is, they either go on a, you can say, a buying spree or a selling spree, and that only exaggerates the move that is already taking place. So a move that is probably 4 5% for the day, that would have been only 3 to 4% in a particular stock for a day, say 6 7 years back, is now going to have a effect in which the stock may fall or rise 8 to 9%, and then the next day the stock will fall, because retailers or other players or even larger players would have made 9 10% in a day and would sell the next day. So that is why this heavy volatility is there. And the fifth and final point in here is that more people have gone into intraday trading. So I've written all 5 points. So what is happening is that there are lesser number of investors. That's what I feel. You can write your points in the comment box, but I believe that there have been more people that are getting into intraday trades, because if you take into account all the brokers, they normally do not charge, or charge very less for delivery based trading, but they charge decently on intraday trades. And what happens is that intraday trades is the main focus of all television channels, all business channels, etc. And that is where the crowd is going, janta is going in that direction. And that is what is scaring me, because if the market goes to 14,000, if the mid cap and small cap index falls another 15%, I mean, most of them would be, some of them, at least 20 25% of them could go bankrupt with the kind of stocks that are being talked about on channels and across, you can say, networks, and that people trade into. I'm on Patreon. I have a lot of members. I do respect them, and there are members on YouTube. There are members on Patreon, and they do send me messages. In some of the cases, the stocks are, in my opinion, they should never have been looked at, but people do invest. And even when I talk to individuals or investors, or retail investors or traders, they fail to understand that whenever the market turns on you, it's going to be a very difficult task for you to recover the money. So that is what is happening. So what is happening is more retail participation has led to a situation where they are buying and selling intraday, and more intraday selling or buying will have more day to day volatility. But if you look at a stock, then it might not have moved from a 1 year perspective, from a 2 year. Many stocks have been there. There are no returns, no negative, no positive returns. There are many agrochemical companies that are trading where they were trading a year and a half back, but there has been extreme volatility. So retail companies, consumer companies. So what one needs to do here is that you have to have at least a 6 months time frame. At least you need. I'm saying that time and again, that do not do intraday trading, do not do weekly trading. Yes, if you get a return, suppose you take up a call again with an ABC company, you take up a call, okay, in 6 months time this can give me 20%, 15%. That's a very good return. That's around 30 to 40% in a year. So if this can give me 20% in 6 months, let's buy this. Suppose it goes up 20% in 2 weeks. Yes, of course, you book your profits, but you cannot buy a stock thinking that, okay, I'm buying today, I'll sell tomorrow, or I'll sell on Monday and I'll gain 5 6%. That will not happen. That will happen once in 10 times or 20 times, and that will not happen, and eventually you will erase your capital. So that is exactly what is going on with the market. So these are the five major points, in my opinion, why there is extreme volatility in the market, and probably this will only increase going forward rather than decrease. So if you think that is going to decrease, I don't think that will happen. There'll be more people using algo trading here in India, and we are at a stage where we are at a very early stage of stock market investing or trading. Uh, Probably we are at a stage which is 30 years or at least 25 years uh, you can behind the US, where early 2000 or late 99, 98, 97, when people used to invest. Currently, I can tell you that in the United States, at least 90 to 95% of the people have their investments in the markets, and it has been there for the last 15 years or so. Even after the Lehman Brothers crisis and everything, people did get in there because people have an understanding about it. Right now, the education level, literacy level with respect to financial understanding is extremely low even now, and it will still take at least a decade for India to reach there. So there's a lot of potential in this market. This is why I believe that there is a lot of potential in this market for individuals who can invest from a 2 to 3 year perspective at least, and not from a 6 months, 3 months perspective. Yes, you can definitely trade on the side, but your major investment should be at least from a 3 year perspective, and preferably from a 5 to 6 years perspective. That's where the most of the money would be made. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. All right. So Kilpest, I believe Rajshekhar, see at around 320 again, it has become cheaper. I'm invested in the stock, so that's a disclaimer. If I had more money, I would have invested at these levels. I don't have funds. I'm 100% invested at the moment. So it is a buy at these levels, and I believe 25 to 30% CAGR return over the next 8 10 years is perhaps very much possible. It's a 1,000 rupees stock trading at 330 rupees. That's what I feel. See, in the whole financial system, I mean the financial stocks, I like Bajaj Finance, FinServ, probably to an extent HDFC Bank and HDFC, and that's just about it. If you really want to buy into something, otherwise avoid most of these companies, gold loan companies, etc. With the change in interest rate cycle, I think these stocks will get hammered. We have seen what has happened with the metal stocks. So I have been calling for sell on metal stocks since October, November, even before that. I think in 1 year back also. Yes, the stocks moved higher, but it seemed that there was a peak coming in, and now what is happening is it's a simple thing. If interest rates are going up, why is the interest rates going up in India and globally? The interest rates are going up to curtail the inflation, which are, why was the inflation going up? The inflation was going up because raw material prices were going up. What are the raw material prices for houses or construction, etc.? What are the major raw material price, you can say, products for cars or vehicles? They are steels, metals, many kinds of metals, different sort of metals, cement, etc. So I mean, these companies, the governments across the globe wants these companies to be hit, wants these prices to go down. So there is no way possible that the metals will perform very well for the next couple of years. There is no possibility whatsoever. Even if you say the demand is, so what will happen is higher interest rates will kill the demand altogether. So if higher interest rates will kill the demand with respect to construction, with respect to buying into discretionary items like cars and vehicles, etc., then how will demand pick up for metal products? So I think demand will get curtailed, prices will come down, and all these stocks will have negative PE going forward. And that is where one needs to then invest probably 2 3 years down the line. This is the time to book profit, and this was the time to book profits about a year back or so. Sir, where there will be huge impact on market due to what, shrinkage in GDP of UK. See, I think yes, there will be, and in fact, that is getting priced in with respect to what is happening with some of the companies that have a lot of exposure in UK. And so one needs to be understood of the fact that the market price in everything earlier than we retail investors, at least earlier than what we retail investors eventually find out. Yes, fund houses, etc., might end up selling early and then buying at the right time, but this is not the time to probably even take a call with respect to what is happening in UK or the US, because things have played out. That is why the market is at 15,200 or went to 15,200, and not, and the market is not at 18,000. That is why most of the mid caps are down 50%, and they are not down 10 15%, because the exposure to Europe and US markets is big for most of the companies, that they were not, it was not, say, 5 7 years 10 years back. So that is getting played out. If you are not down a lot, yes, you can definitely even sell now, but then there is no one to tell you that okay, the bottom was not made about a week back. Who knows, the bottom was made about a week back. Who knows, the bottom will be made at 14,000, and all these stocks that have exposure to UK and these companies, or even the market altogether here in India, might go down another 10%. And that is why in the short run it is extremely difficult to say as to what will happen. And that is why in the short run it is better to not trade in the market with a lot of, you can say, with a lot of money at this point of time. Probably when things clear up, even if the market is at 17,000 at that point of time, it's better to trade then rather than trade into the market thinking about all these things, because I believe most of these factors are priced in at this point of time at 15,000. Titan can give you 18%, 17, 18%, even from here. I mean, the stock is down 20%, remember, 25% from the top. So from here, I think 17, 18% is very much possible. It's at very attractive levels. Even if you ask me, Titan, a couple of companies where I'm invested from a long term point of view, Asian Paints, Pidilite, you look at a DMart, you look at Bata, you look at all these companies, these are looking extremely attractive now. So Acrysel, in my opinion, is trying to make a bottom around 480 500. I mean, if you are a 2 3 year time frame investor, you can definitely invest into the stock at these levels. Tanla, I have a different opinion on it. Yes, it is growing in that manner, but I have, see, around 1,000. Yes, you can definitely invest, but whenever a move comes in 1,000 1,100, you can buy a move of 10 15% come in, you book your profit. It's not a stock where you can now invest long term. I mean, the move has already happened, that long term move that had to happen. Okay. I think you can average a Larsen and Toubro in Infotech. I think in the IT index also we are somewhere close to a floor, and these stocks like Tata Elxsi, L&T, Infotech, you have other companies in the mid cap domain. They are quite good companies, and they can be average. But again, the time frame should be more than 1.5 years. Yes, the returns could be made in 6 months, but you should have in your mind that okay, you are putting in the money for the next 18 months or so. See, Varun Beverages looks good with the kind of chart patterns it is making. I think it could head towards 950,000. But we need to look at how their performance would be in post the monsoon. I mean, the June quarter should be good. So at these levels, you can trade. I won't say you invest, you trade into it during the seasons and make money. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel. Hit the bell icon so you get my videos straight away when I post it. And kindly support me on Patreon. Thank you.